What's up, YouTube? In this video, we're going to go over KE Holdings, ticker symbol BEKE. Year to date, this company's up 1.6%. Over the course of 1 year, it's up 30.4%. Short interest, a little high on the short interest at 4.4%. Earnings on the company will be in December 1st. We have majority of our revisions have been lower on the EPS side of things. So from their earnings release that they announced a special dividend and increased its stock buyback program. So they had a one-time dividend payout to shareholders. They had a share repurchase program was increased to 2 billion from 1 billion and was extended into August of 2024. Since their program, they have bought 605 million shares. So we're going to go through their financials. After financials, we'll run this company against a couple of their competitors, and some of them aren't really competitors, but rather just in the same industry in different countries. Then after that, we'll run those financials through a calculator and figure out a fair market value on KE Holdings. So KE Holdings engages in operating an integrated online and offline platform for housing transactions services in China. The company operates in three segments: existing home transactions, services, new home transactions, and emerging in other services. It facilitates its various housing transactions ranging from existing and new home sales, home rentals, home renovations, and furnishings, and other services. The company owns a real estate brokerage branded store and a franchise model for connected brokerage stores. The company's been around since 2001. So also one thing to realize is that all these numbers down here are going to be in euros and not in USD. So as we go through the financials, we got to keep that in the back of our minds here. So we got our revenue, gross profit, net income here, and all three trending higher. Not the revenue and gross profit look pretty good. The net income a little choppy here. You can see here's net income on its own chart. But it is beginning to point higher, and it has made its all-time high for net income. Gross margins trending in the right direction now, making a new high on gross margins. Net margins, same thing, making a new high and trending higher. Good to see. Revenue, gross profit trending higher and starting to grow, find some more growth within this company. So we come down to return on invested capital, sitting at 3.3%. Not the best it's ever been, but it is still positive. PE ratio currently at 28.85. Cash to debt. So they've got more cash than short-term debt, and they've actually got more cash than total debt. So that's a good balance sheet there. Net income to free cash flow. They have a lot more free cash flow than net income. And we can come up here again. This is not in USD. So we got net income plus stock-based compensation that gives us, and plus some other things within the cash flows, $12 billion euro operating free cash flow, very minimal amount of capital expenditures. So we give a pretty nice free cash flow on the company. So let's break down those cash flows a little better so that way we can understand them. So we got our net income of 710 million. We've got depreciation and amortization of everything, adding in another 200 million. And then we've also got 420 million in stock-based compensation. You kind of add all three of those up. So you got 620 million plus 7, it gives you 1330. That's almost your full cash from operations. You got an additional 300 million there, which a lot of those changes, or that additional 300 million increase, could be from just changes in the overall balance sheet. So that gives them a positive cash from operations of $1.6 billion. And then they've got capital expenditures of 104 million. So you take that, you get 1.5-ish billion dollars in free cash flow on the trailing 12 months there. So pretty good. Not too bad. A little too much stock-based compensation. It kind of offsets the whole purpose of a stock buyback program, because then they're just going to be buying back shares that they're reissuing anyway. So we can see our share count is getting diluted slightly, but maintaining a relatively stable share count. Capital expenditures seems like they're also being relatively maintained and not costing the company more money. So overall financials look, they look okay. They're trending in the right direction for the most part. Some metrics here could be a lot better, but that also could come with the industry, where there's only a certain amount of net margin that can be made, and there's only a certain amount of return on invested capital that can be made. So as we compare the company to the other three companies we have to compare to, we might be able to understand roughly where the industry might be. So you've got three other companies to compare to. We have only just two red flags on the company, and that's mostly just return on invested capital. We do have a lot more operating cash flow than a net income. That is not coming up as a red flag, even though it should be. So because this company is, some of these companies are in different currencies, the these first two graphs are kind of incorrect because, this is in euros, and I believe CBRE is in USD. So it kind of throws things off in terms of revenue and gross profit and all that stuff. So, but we can look at our growth rates over here. We can see BEK sitting about 10% on EPS and revenue growth. But across the board, everybody else is looking at significantly better growth rates. Here's our margins. We got all three margins here. We can see CSGP has the highest margins across the board, with BEK being number two. You can kind of see operating margin. Maybe it's about in line with where operating margin might end up. So maybe we can see 6 to 10% range. It is growing currently, but maybe, we'll have to see. We don't have a whole lot of data to back that up. Profit margin, we can see same thing, 7%. We'll have to see roughly where that could end up, but it doesn't look like it could go too much higher based on what competition is doing, right? Free cash flow, that's in different currencies. Return on invested capital, we have, again, so this kind of shows you that maybe return on invested capital in this industry is maybe looking at 3 to 6% range. So maybe they're in line with where they should be, maybe slightly low actually. PE 27 across the board, right in the middle. CSGP probably has a high PE like that because of their margins and their growth rate over here too. Now on to the calculators to figure out what this thing is worth. So P/E valuation, we get $5.86 per share. Multiples comparison gives us $22.57. Our manual PE gives us 10 years to earn our current market cap. So pretty undervalued based on that. Price to book, 5-year average 3.21, currently at 1.76. Our PEG ratio currently only at 1.49, which is telling us we are kind of on the lower end of fairly valued. Forward looking, undervalued. Grams valuation, $14.06. And because they don't really offer a dividend, but they do pay out random dividends. So there is no dividend discount model to be had there. Discounted cash flow valuation. Analysts gave them a price target or a growth rate of 64%. Their history is 260 or negative 261. I said, you know what, let's just give them 21%. And that gives us a DCF price per share of $56.75 per share. Rule 72, we have three different sources for an EPS growth rate for an average growth rate of 12.22. That goes into 72, 5.89 times, and that goes in 10 years, 1.7 times. So we get to double our EPS one time and then 0.7 times. So I gave them a future EPS of 2, which is a fair value today of $12.22. Summary of BEKE, currently trading at $14.89. Our fair market value based on all the valuations we just went over for an average is our $22.29 per share. 30% margin of safety, $15.60. Analyst price target, slightly higher than where we are at $24.50 per share. Over here on the stock chart on BEKE, we not much to look at, honestly. It's pretty boring. We've got potential resistance point at $20 per share. We're kind of making just this really, really tight wedge. We are on the weekly chart. And right here was earnings. And nice big green candle, but since then it's just kind of sold back off to where it was before earnings and is sitting near the bottom end of this channel. It's hard to kind of tell where this company might be headed. The financials are okay. I think it's going to take another quarter or two to understand. Maybe get rid of some of the fear over in China. Not a whole lot of people are interested in investing into China right now. So I think it's going to take a few quarters yet before this thing maybe finds a direction. If there was to be a direction based on the financials, it looks to me like it's going that way, and retest 24-ish dollars per share. But anything can happen. It seems like it's doing pretty good in terms of how the economy is doing over in China anyway. It sounds like China's economy is beginning to turn around and starting to trend up, higher. But I don't follow China all that well, so that's kind of speculation on my part. But that's if eventually China's economy is probably likely to turn around and start heading higher. And when it does, then this will likely follow and real estate will be popping over there again. So But that's kind of it for BEKE or KE Holdings. If you found value in this video, drop a like, subscribe, and comment. And back later with another stock analysis video.